China's leadership is due for a reshuffle in slightly more than a month's time, so the latest economic data are probably making for some sobering reading at the highest levels of the Communist Party. Analysts are now saying the economy likely peaked in the first half and may be running out of steam. Factory output rose 6% from a year earlier in August. That was short of analysts' expectations of a 6.6% expansion and slower than a 6.4% growth rate in July. It was also the slowest pace this year so far. Retail sales growth also slowed to its lowest level this year, expanding by 10.1%. That was against a projection of 10.5% and a 10.4% growth rate in July. And it's a similar story for the growth in spending by companies on things like heavy machinery and new technology. So-called fixed asset investment rose by 7.8% in the first 8 months of the year. That compared to the same period in 2016 against a forecast of 8.2%. And that is also the slowest rate since 1999. Now, China's relations with the US have taken another turn for the worse. US President Donald Trump has blocked a Chinese government-backed company's acquisition of Lattice. That is an American semiconductor maker, and that is based on national security grounds. Now, the $1.3 billion deal was first announced in November 2016. So far in 2017, Chinese investments into US firms include 83 deals worth about $25 billion. Trump is only the fourth US president in 25 years to block a foreign takeover of an American firm over national security. Beijing and Washington are deeply divided over trade and also North Korea's nuclear program. Professor Yu Xiong is a core member of the China-UK Innovation Expert Group, and he joins me now from Newcastle in the UK. Professor Yu, thank you very much for joining us on Money Talks. Let's talk about those economic numbers first. You know, everything from retail sales to fixed asset investment, industrial output, all lower than forecast. Do these numbers signal something structurally slowing down to you, or do you think that these are merely cyclical?
For currently, China is reshaping its economic structure, and just like a big ship, heavy ship. So when they want to turn directions, they need to slowing down first. So China now focus on more on innovation, focus on more on technology. So they seems to shift away from made in China and become to the concept of created in China. So this direction change will definitely slowing down the economic development for a little bit, but this is planning for the future.
So if I'm reading you right, what you're saying is that as China tries to go up the value chain, towards more value-added services and goods, you are going to see a temporary slowdown in growth. Is that what you're saying, essentially?
Correct.
I see. That is interesting. So let's talk about now this deal with this American semiconductor company that Donald Trump is blocking. Do you think it could trigger a trade war between the two? Tensions are already high.
Actually, US and China, they are the top two world economies. So basically, they could be seeing each other as competitors. And maybe in about 10 years' time, China the GDP in China may be larger in US. Of course, in some very important sectors or some important companies. So China want to, for example, in technology sector, China want to take over as the leader in the world. But of course, US may not allow this to happen easily. But I think this thing happen normally, and I don't think this will create a trade war. It's just like what has happened for the past maybe 10 or 20 years. Every time relating to such kind of sensitive trade, there is some tensions. But I think in general, collaboration should be the primary focus for the countries in the world for in its market economy. Yeah.
Right. Very quickly, Professor Yu, China itself, though, does protect a lot of its own tech firms against competition. That is probably likely to continue, isn't it?
Yeah. Actually, China is a developing country, but it's now becoming more and more powerful. In the same time, China, as you said, China protected its technology company because the technology is not so advanced at this stage. China want to help them to be more developed, to be more advanced. Sometimes it's very similar like what Donald Trump did in this semiconductor deal. So China also want to protect its own industry. So I think, just like I said earlier, it's very normal. There are more and more such conflict may happen in near future between China and the US. However, this doesn't mean there will be a very large scale trade war. So I believe collaboration is the main direction for any country in the world.
Right. Professor Yu Xiong, great to have your analysis. Professor Yu Xiong there from Newcastle in the UK.